This is Randy Finney with Right Side of the Chart, and this is a midday market update for Wednesday, October 3rd, 2018. What I'll do in this video is a quick update on the broad markets. Really not much new to report. I'll just touch on that, and then do an update on gold, the US dollar, precious metals, and crude oil. I want to touch on and give you a few short trade ideas. I don't have a lot right now. I actually have a ton on certain watch lists, but here's a few that stand out. I was just coming through the charts recently. I want to point some out that may trigger soon. Again, I did a video exclusively on long trade ideas the other day, so that's why I wanted to give you a few short trade ideas. All right, let's start out with NQ, the Nasdaq 100 E-mini futures. This is a 60-minute chart, same old story. Again, this trend line right here, this is our primary trend line. It goes to the left of the chart. I have it cut off here, but it's coming through. And so this is a zoomed in 2-month view, back test, back test, back test. Same old thing I've been saying for a while. And here's that fairly well-defined trend line. We just had one brief spike below. We shot back up on it. So a lot of reactions. Again, this is a trend line I'm watching on NQ, and it did break. But as I said recently, it broke yesterday. We snapped above it. That was a brief that was faded. It's been very erratic trading here lately in NQ, but we've been back testing it since. So this little area right here, everything you can see, we're just below that now. However, that doesn't give us a overall sell signal in the broad markets yet, because the other large cap index and more of really the stock market, the S&P 500, is still above trend. So this is the ES, which are the S&P 500 E-mini futures. This is a 3-month chart, and that trend line gets chopped off just back to the left of the chart here. That trend line generates off a reaction low here. It must be back in late June, I think. And there it is, well defined, and ES continues to dance above that trend line, hold above that support. There was divergence at the highs. We're making roughly equal highs now. Any higher high will still be a divergent high. Again, something I just don't chase. So again, we're not going to, we won't have a sell signal until we have a definitive and impulsive break of this, and then I want to see these lows undercut as well. This trend has been pretty resilient. Let's look at QQQ and NQ for a second here on the 60-minute charts. Here's QQQ 60-minute chart, same story. We have to go back a little farther. There it is, early April, that trend line generates off of. So well-defined trend line on QQQ, just as with NQ. Breakdown, back test. So the Qs have broken down. And, if you've been following my analysis for a while and you're getting frustrated, I've been talking about this back testing, these divergences, and still expecting them to play out, but they haven't. Well, so you might say the Bulls, at this point have won or are winning as far as these technicals, these bearish, the breakdown, the divergences not playing out. We're still back testing. But when you look at the bigger picture here, let's just jump over here, get rid of those trend lines. Here's QQQ. Again, this has been the leading index. And so if I grab the crosshairs here, that's August 30th. So over a month ago. We've gone nowhere. We're actually down. So that's the end of it. Now we're still in an uptrend. So any bulls or longs that bought back there on August 30th, end of August, they're slightly underwater to flat, we'll call it. So it's really a stalemate, at least over the last month. But again, it's these divergences. So it's not like if you're waiting for this breakdown like I am, it's not like you're missing out on anything. The market's gone absolutely nowhere. The S&P 500 is slightly up. I think it's a quarter point, 0.3% over the same range, whereas you can see here QQQ is down. And as you probably know, if you're a member of the site, we don't have official short trades on any of the large cap indexes, but we do have a short on the small caps, and you can see they're down over the last month or so, by about 5%. So they've got their own little correction going on there. Looks like we bounced right off this previous reaction low back here so far, and really don't want to focus on an update on the trade, but since I'm on IWM, I have several trend lines here. Here's one trend line we have to watch. This is a longer term trend line that comes in. The official trade idea, where are my targets? I have different boards here. One of these boards will show, oh no, that's why, of course, we did TWM. I did that. Allows a little more flexibility if you have a non-margin account, a cash account, or an IRA, and you want to hedge or put a short on. You have to use something like TWM. You can't short inside of an IRA. So there it is. We hit the first target yesterday, and as often the case, and the reason I list different targets, some traders like to book quick profits, some like to take partial profits, some, if you're very active, can game a pullback. But each target level is an area I expect a reaction, and I define a reaction as a pause, or a pullback and or a consolidation. So far we've consolidated. You can see yesterday we hit it and on TWM, and we're really within that area. So that's more of a consolidation, but definitely a reaction, meaning we were heading straight up, we stopped, and we're down a little bit today in TWM, meaning IWM's up a little, which is what I would expect, a bounce or reaction off that level. But I just want to say this. Everything I look at this chart, and I look more importantly at IWM, I like to use the one-time non-leverage for charting purposes. I still like this trade, and especially if the large caps break soon, those same support levels I told you about, I think we'll see small caps move down even more so. Right now, they're diverging quite a bit. As I talked about, that's happened in the past, but for the most part, you're not going to see a huge correction in the small caps if the large caps continue to rise. So to really help this trade out, I think when we see the large caps break and get some more downside on IWM. Otherwise, that may put somewhat of a floor, relatively speaking, under IWM, as long as the large caps either trade in this sideways trading range they've been in for the last month, or if they manage to push on higher. I don't think that'll be the case, but anything's possible. Okay, let's talk about gold. And if you followed me for a while, you know that my analysis on gold is predicated largely on my analysis for the US dollar. This is one of my preferred trading proxies, a Euro-US dollar pair. Just to recap for those new here, this is a pretty significant support level, right about where we're at now, that 115-ish level. A lot of reactions, and this was our a whipsaw signal, a false breakdown. We snapped back below it, snapped above it, and now we're testing that level again. So we've had two tests since we've broken out. Yeah, we're a little bit below it now, but sometimes you get that. There was a little pop below it there. There was a fake down move, and as of now, I'm seeing things that tell me this level will probably hold. And if we get a little undercut, that's fine as long as we reverse soon. That will help flush out some of the euro bulls and suck in some more, or I should say dollar bulls. Will suck in more dollar bulls. In other words, when this goes down, the euro is falling against the dollar. So right now the dollar's been going up since this has dropped. So if we go down a little more, it will embolden dollar bulls. And maybe suck in some shorts here on the euro and get another reversal. That'd be nice. But either way, we're still flirting. We're effectively on that level now, just a hair above it. It's a resistance zone. If you look close enough, I have two lines because, again, these candles kind of trade around that range. So far, so good. I'm going to point this out in the US dollar ETF in a second as well, UUP. But one of my favorite trend indicators is the signal line on the PPO. That's the 9 EMA. That's the white line. I use that. It's the lassitude across. And plain and simply put, when the signal line is above the zero line, that's this dotted line right here at the zero level. When it's above, the trend is bullish. And when you cross down below, the trend is bearish. So you can see bullish, bearish, bullish all this way. Actually, it's hard. I'd have to look closely to see where that crossed. It looked like we traded right on the zero line till there. Bearish at this point, and all the way, actually, I should have dragged that a little farther. I can't move the box once I draw it. I have to erase everything. But that's it. So we're bullish. So, and if you look above, of course, take these trend indicators. So bullish up to this point, it told you the trend was bullish. Here it said the trend was bearish. Crossed over, it told you the trend's bullish again, and it stayed bullish until we had a bearish cross here. So my point is, you can see it's done a good job, and right now, at least by that one trend indicator, and this is just something I take in conjunction with everything else. It is not a be-all, end-all, or a standalone buy-sell signal, but it is telling us that the trend went back to bullish here, and we're back testing. That zero line often acts as support when tested from above, or resistance when tested from below, as it was here, and you can see that. So as of now, we have a bullish trend and we're back testing support. That can certainly fail. If it does, my bullish outlook for the dollar starts to diminish, as we go lower here, especially if we don't just have a brief breakdown and flush out. But as of now, I'm viewing this as a pullback to support, and I don't want to say a buying opportunity in gold yet because I want to see gold take out, as I've harped on, and I'll get to in a second, that 12.13 level on gold futures. But as of now, everything looks okay there in the euro US dollar. We're certainly pushing the upper or lower limits of that support level. Here's the 60-minute chart I talked about recently, and this gives us a little more insight to where the euro might be headed in the near term. We had a divergent low right here, which sparked this rally. That rally ended with a divergent high. You can see the negative divergence there, and that set off this downtrend. Now we have this bullish falling wedge pattern I drew here with these two lines. I put this up the other day, and right as we're testing that longer term, more significant support right here on these recent lows, we have bullish divergent. We had a divergent low. We had a breakout. Started to get some impulsive buying recently. So far, that the breakout, that initial thrust has been faded, but we may be coming in for a back test of actually the way I move that trend line. You can see I capture all the reactions here. The reaction that high, couple reactions there. So we're back testing now. You know, we could be liberal with these trend lines, move it down to about that level. Maybe we back test down there, but maybe we back test right around here a little bit lower, maybe undercut that low. Either way, this looks like, as of now, I'm treating it as a breakout and a back test. Some breakouts, you break out and run. You have an initial pullback rally afterwards that doesn't go back below the breakout and you continue on. Other times, which especially in a downtrend, you get a breakout, a back test of the trend line, and then you move higher from there. So right now, that's my preferred scenario at this time. It remains my preferred scenario, and that's that. And again, I don't want to spend a lot of time on gold. I've covered it ad nauseum lately. But as far as the technicals on gold, we need to see, go down here to an hourly chart of the futures, and you have this downtrend line right here. Here, I'll zoom in a little bit. This is GC, the gold futures contract, well-defined downtrend line, a lot of reactions. We failed at it again today twice. Look at this, boom, boom. And that level is also aligns roughly or pretty darn close to this 1213. That's this horizontal line I have here. Lots of reactions. You can see this was a very well-defined support shelf. Gold broke support, had impulsive selling, came back, a little momentum overshoot there, but it fell back below, and it has been testing this 1213 level as well as this downtrend line. As I say often, I love it in trading when I have not one but two well-defined resistance levels for a breakout. You know, if you just have a downtrend line, you know, sometimes and usually that's all you get, or sometimes a well-defined horizontal price level. In this case, we have both. So if gold breaks out that level, takes out 1213 with conviction, it's taking out this downtrend line and it's taking out 1213. And I think we'll see I think it has a potential to spark a very sharp rally. But it is going to hinge on what the U.S. dollar and the euro does from here. All right, so that's that. Let's jump over. I told you I would talk on UUP is the U.S. dollar ETF. Or ETN, I should technically, it's an ETN, exchange traded note, very similar. Anyways, here's the that same PPO indicator. And what I did there is I marked arrows. This is a daily chart, goes back 2 years. So here's the US dollar index, or at least via their the tracking ETN. So there it was, bearish crossover. And again, if you just go up high, up above to prices, you can see we had a sell signal there, and it proved to be we had a little whipsaw signal, but pretty much it told you right here the trend turned bearish. Barring this little brief whipsaw signal there, it stayed bearish to this bullish cross right here. Told you the trend was bullish until about this point here when we had a bearish crossover. Now it told you the trend was bearish until this point here. You can see the bullish crossover and so forth and so on. So there it is, and we recently had that bearish cross and that white line. It is back testing now, just like I showed you on the euro US dollar chart, but that's an inverse of this. You flip it over, and we had the PPO on a sell signal over there, and on a buy signal, and we still have it on a sell signal since this point right here, and it's back testing now. So pretty much we're at an important inflection point, or support level, I should say, on the euro US dollar, and I just wanted to point it out that the trend indicator also confirms here, puts the dollar on a sell signal, especially in wake of the breakdown. You can see the UUP had a bearish rising wedge pattern, or at least an uptrend line with divergence there, and it broke down. And so far, this is what a breakdown looks like. We had a breakdown, well-defined uptrend line, negative divergence, and we had the initial leg down right there, a little kickback rally, another leg down, and this is what my expectation is, but if things go the other way, then my outlook is going to change. And again, gold still hasn't broken out yet. Gold needs to break out, needs to firm up, so there's still work to be done. I view the dollar in a topping process most likely, the gold in a bottoming process most likely, but we still need a little more evidence to say with a high degree of confidence. I think once we get that, again, since I'm looking at a major bottom, I think we can position in gold mining stocks, silver, platinum, the precious metals for long-term trend trades. I have near-term targets on that GDX long trade and the PPLT, the platinum long. Those are both official longs, but I very well may extend those targets and maybe look to position in one of those trades for possibly a year or more, depending on how things go. Okay, quick look at crude oil. I believe that crude is quite likely at also looking at potentially a major top here. This is a daily chart. We had a series of divergent highs, each of which produce a correction. So it's not that they're not working. These were sizable corrections. Divergent high 1, we pushed up, made a second, or really an extension of the same divergence, divergent high 2, and now this is divergent high 3. You can see a minor trend line I have right here. Extend that out. That's our next sell signal if we get a break of that trend line. And from my experience, and not always, but usually 3 strikes and you're out as far as divergences go. When you have 3 consecutive divergences, it's usually that third and final one that does the trick for more, instead of just a correction, a major trend change. So, and it's not this alone. More so when I look at the weekly chart of USO. This is USO. We had big divergence back here. I was very bullish at the time on USO and the energy stocks. We made a lot of nice trades there. And then it set up what happened. We had a multi-year basing pattern right here. You can see this is where crude oil was basing. And then we broke out here. We back tested. This is this shaded box right here is the base really. And you can see once we broke out, we back tested and we moved higher. But we've also run into a pretty significant support around, give or take, around the $16 level. And you can see that level, of course, it's not arbitrary. There were a lot of reactions back here in USO. Reactions from above, it was support. Then we broke support. It was back tested several times. It failed, so that's resistance. So whether we punch through it or not, I believe that's a pretty technically significant level resistance. And there's negative divergence, just like we had negative divergence here. And again, this is a weekly chart. So when you get divergences, if they begin to play out, and for a more powerful, longer-term sell signal, you need to see this uptrend line right here off the early 2017 lows go. So this is a trend line. So we don't have any sell signals right now in crude. We just have it at resistance, overbought with divergences. But that's USO. If it can punch on through there and certainly see a possibility. I don't have any resistance on the long-term chart all the way up here at about 2070. So try to quantify it for you. If we do break out and burn through these divergences, we're probably looking at about another 27, almost 30% upside in crude. But let me show you what the futures charts look like here. Let's grab this, go over to CL. Let me find my symbol list, which is off to the right on that monitor. And let's go look at a weekly chart. We were just looking at a weekly chart of USO. So this is CL. These are crude futures, which USO is tracking. That's any commodity tracking ETF invest into the futures. But I always like to confirm what I'm seeing, because some of the commodity tracking ETFs do a better job of tracking the futures than others. Some are abysmal. The natural gas futures are abysmal. The ETFs, the ETNs, the charts don't look anything. But crude does a very good job. A lot of the ag commodities do a good job of tracking the actual commodity or the futures. So we're looking now at a chart going back. Here's 2008. This was the last bull market with that big blow off top in crude. But what I wanted to highlight real quick, and then we'll move on, is this level, the roughly where we're at right now. You can see back in 2006, there was a major reaction high there. We kind of chopped through it. I'll give it that. After the financial crisis, things were trading, everything was going crazy back then. But once trading started to normalize in this range, you can see here, 1, 2, 3. We had 3 tests there, and that was a multi-year sideways trading range. That marked that as a significant support level. And what confirmed it is the next time we touched, we finally broke down. And once we broke support, the fact that the selling was so impulsive, we had a waterfall sell-off afterwards, that although we didn't get a reaction there per se, meaning another bounce, the fact that it was impulsive selling once we broke, to me, helps validate that as an important level back then. And of course, was support back then. Support once broken becomes resistance. So this is really, for the most part, the first test. We had a near test recently, and you can see I have two lines in close proximity. So we'll call that really a resistance zone. We tapped on it once. We're tapping on it again. And so that's it. So we have crude overbought at resistance. Even if the longer term outlook is bullish and we're going up that other 20 or 30%, I do think the odds for a pullback here are pretty good. And so that's crude futures. So they're trading pretty erratic around here. I put intraday charts, 60-minute charts all the time in the trading room. And of course, if you're a member of the site, gold member, just drop me a line in the trading room if you want an updated chart and my thoughts on the near-term direction. I'll be glad to do that for you. Okay, and to wrap this video up, let me just give you about half dozen or so short trade ideas. This is Netflix. I put up a front page post, so if you're watching this video, you probably already got that. Some of the other trade ideas I only shared in the trading room. This one, basically we're shorting where we shorted last time around on the last official trade. What we did on earnings day back here, they had a huge move down. Waited patiently on that. Didn't want to be the first mouse, because the second mouse usually gets the cheese, and that was the case. We shorted right there, and I did that because it was a pushback to this support level, this line right. I can draw it here with the circle tool right there. So we nailed the entry on that one. Covered, gosh, I can't remember. We covered, somewhere around right here, I believe. I've modified. The targets have since been changed. And although I had longer term targets at the time, I put up a chart. I made a case for a pretty strong bounce. I actually reversed, went long Netflix off there. No, that was Apple on an Apple short. I can't remember. On Netflix, I may have reversed that trade or not, but not officially. We just closed it there, and we had a downtrend line. I'm going to draw it out here, which was taken out. There it is. You had a downtrend line that was taken out right there. That might have been the long entry. And what it has done since then is set up in this wedge type pattern right here. So there's a couple things to note. We have a bounce back to resistance. That was certainly a significant level. There's a gap there. There were reaction highs right here. And so we're back at that level again. That's about 380, 381 or so. And again, I showed that on the 60-minute chart at the time when we covered the trade. Maybe it was 384.37. I think I had that level there. And you can see there's the gap right there. That was that earnings day, the big sell-off and the recovery. And so there it was. That's what it was. It's set up in this bullish falling wedge pattern, before we covered, and there was a breakout. And so we've come full circle. We had the initial kickback rally. Remember, that was a more significant breakdown on the long-term charts there. And on the 60-minute chart, we set up in this bearish rising wedge, negative divergence, bounce back to resistance. And I don't want to jump the gun on this one, so I set the entry criteria. We need to take out 372.75. Why that level? Well, two reasons. Number one, first and foremost, it's below this uptrend line. If we break 372.75, we've broken down below the rising wedge pattern. And then, of course, anytime if I'm looking at in this case, a short setup, if I see horizontal support just below a trend line, I give it the benefit of the doubt, especially because we're in an uptrend. This is a counter trend trade, so you don't want to jump the gun. If I see two support levels in close proximity, I wait till the latter of the two break. In that case, this is 32.75, so that will trigger our sell signal. So this is what's called a trade setup. There's a big difference between an active trade and a trade setup. A trade setup is something setting up in a potential, with waiting for a breakdown, in this case, setting up in a bearish chart pattern. But if we don't get the sell signal, if we don't break down, we don't have a trade. So big difference between an active short trade or being bearish on something and actually shorting it and having a position. So this is something I'm waiting, and I think we're close, but we're not there yet. The other one, AMD, I've updated this many times in videos and everything recently. We had, unfortunately, and this is what the market's done in recent years, and I have no doubt I've had enough stop runs in the last year or so compared to the last 10 plus years that I've been actively trading, that I'm certain it's these algo programs that are written to sniff out where stops are placed. And I've tried to adjust that, and usually what I do, and I've talked about this, I started to modify trades based on the 60-minute chart. Instead of doing any move above a level like this, that was our stop I think last time, I'll do a stop based on a daily close. That would have avoided it. Long story short, The official trade was stopped out by just a hair. You can see that little doji stick that clipped our stop, and then this one went on to play out exactly as expected. And I still think, and I mentioned this in the trading room quite a bit. I posted this yesterday that it's still I think an objective short under 30.15. In fact, when I added this trade, we shorted here on the breakdown of this uptrend line. I did state that the higher probability entry would be to wait for a break of 30.15. That would have never been. We wouldn't have had our stop clipped out there had I just waited. So anyways, hindsight's 2020. And you can see we danced on that level. I had a line at 30.17, but I wanted to give it a 2-cent margin of error. That's why I said wait for a break at 30.15, and it did. We finally broke that support level yesterday. You can see that was a trading range right there. A lot of consolidation, sideways trading. Once support broke, as is often the case, you see impulsive selling. We didn't just limp down and walk our way down to my first target. We hit it quickly in just about one day. So there it is. First target's hit. As is often the case, you get a reaction on the initial tag of support from above. But I'm doing this video because I think AMD is still going to continue down eventually. This 2482. Now, where do you short it? Well, if we got to bounce back all the way to 3017, that would certainly be objective. Or I wouldn't even wait for 3017, going a little shy, maybe 3012 to 3014, somewhere around there, possibly even 3010 with a stop somewhat above for the next thrust down to that second target, 2482. So this is still an unofficial trade for now. But like I said, I've been updating in the trading room, and I know some people held on and gave their stops a little more room. So kudos to you. So from where we originally shorted, how much did that fall to T1? That was about a 15% gain so far on that short, give or take. And again, I look at the daily chart of this one, potential buying climax. I look at a weekly chart. I look at the history. I've done that in the past. The history of the corrections on AMD. I don't have everything marked up here, and I don't want to get off topic, but the trends in the semiconductor industry and some of these stocks are tremendous, both on the long and short side. We're talking percentage gains if you ride even a bulk of one of these trends, not the entire thing, well into the double digits, 30, 40, 50, 80% profit, both on the long and short side, sometimes triple digits, 100+% on some of these runs. And I think there's a lot of potential. I just need to see a little more evidence. I need to see technology break, XLK. I need to see the semis give me a little bit more evidence that they topped. They're still trading too close to their highs. I think a top is likely in, but again, that's my hesitation here on the semis right now. But I wanted to make mention because what do you do with that? Well, if you shorted AMD up here and you're short now, and you think there's a potential we can see a significant top here and a correction in the fourth quarter like I do, you can allow for a runner trade. So let's say you shorted this breakdown and that was your stop up here. Well, you've already hit your first target. So at this point, it's prudent to lower stops to entry to protect your, protect at least your principal. You would be giving back profits if you moved your stop to entry, but you wouldn't be losing anything. And so a runner trade is leave that stop there. If this thing starts to play out to the downside, you periodically move your stops down. I can tell you with AMD, you're going to need wide stops. You're going to need stops measured in double digits if you're trying to swing trade down, a trade that I think can easily give you 50% or more over the next year or so when the semis break, if they do break soon. So if you want to go for the swing for the fences, that's what I call a runner trade. Give it some room. As you get profitable, you can always add to the position as well. And you can trail your stops down. And what I do personally, I like to micromanage trades. I like to cover on these levels, sometimes go long, get back in short on a bounce, sometimes or on a break at that level. I can, each of these levels are where I expect a reaction. And this potential third target, if we get down there around 2016, that's an area that I would most likely be covering. But again, I say that now, but at the time I'd have to look at how the charts look. What's the broad market doing? What's the technology sector, XLK, doing? What's the semiconductor sector? All those three ETFs I follow, SOXX, XSD, and SMH. So those are the three main semiconductor ETFs. How do they look? Did they just break major support? If they did, I may just tuck away a short on AMD, throw away the key, obviously metaphorically speaking, with a stop in place, and never get married to a trade, never fall in love. But and again, go for the big runs, just like back here. And this drop right here was, what is that, 78%, and that's run of the mill. Again, I've covered this stock in the past, and in videos. You know, there's a 96% drop. It's just the nature of the beast. These are the trends within this type of company. Okay, moving on. That was a lot of time spent talking about AMD, but again, I just want to impress the potential in that kind of stock, and you don't see it now in an uptrend. Obviously, it's been the profits have gone the other way, but AMD's day will come where that stock, this semiconductor cycle has run its course, and this one is very long in the tooth. That's all I can tell you. I can't promise you it's over. Can't promise how much more it has, but I can tell you that nothing changes. Everything is cyclical in nature. The economy, the stock market, the semiconductor cycle. So we'll see. This is WTI. This is an energy stock, oil and gas E&P. So we'll look at XOP real quick, which is the ETF that this one, the industry this is in. But I see a nice divergent high. We had a divergent high here, and there's another example: swing trading. Yeah, the primary trend is up, so you swing trade. That was a 30% drop, almost 37% drop. I'd take half of that and be very glad on the short side. But I don't chase this stock long here. I know the trend has been up. There was another divergent high right here. You can see big correction afterwards. Now we have this divergence has been extended, so we have another divergent high. We had a trend line here. It was broken, but we regained that trend line. It may still come into play, and I think it will. So probably your next sell signal will be a break of this. But this trade hinges on what crude oil is doing. Crude's had that last thrust up to new highs, so the energy sector stocks are getting an extra breath of life into them right now. But here's that divergence, negative divergence. I could draw it out on the RSI too, about equal high, roughly equal highs on the RSI. Why prices are making a higher high. We look at a weekly chart, and you can see WTI. Again, this is one of many. I'll bet you if I go through the XOP, I can find dozens of potential setups. So we don't have a sell signal yet, but you can see a lot of reactions around this level. So, excuse me, that's a resistance zone, runs about 1040 up to about 1229. Pretty wide resistance zone, but that's what the longer term chart looks like. And of course, you want confirmation. If you're going to short an energy stock, you want to make sure the sector. So WTI belongs to this subsector, the energy stocks, oil and gas exploration and production. That's the E&P part. There it is. You can see I have a resistance level here at 45.25, and that's where we're at. So we have both crude oil and the energy stocks at long term. Again, this is a 10-year weekly chart, long term resistance. So that's why I think at the very least, probably a pullback or maybe a little more consolidation. A breakout is possible. I have to say that. I have to look at this chart and try to be as objective as possible and say that we already hit that level twice and failed, and we've been consolidating. This consolidation could be building up the energy for a breakout, and this is why you don't get married to a trade. I think we'll fail here. I think crude will probably pull back in at least again for a correction or a pullback. There's a long-term trend line XOP needs to take out. So that's it. All I can tell you is at resistance, we're recently overbought. If we make a new high in XOP anytime soon, if we punch above that level, and now that I look at these indicators in the weekly, I'd actually favor a brief breakout and then a reversal. That would give us negative divergence. You can see here another pop up in the PPO, and the RSI, confirm this negative divergence on the weekly. And targets would be the bottom of that range around $40, and quite likely after a bounce there, a move down to this trend line. Those would be my minimum targets on XOP. And keep in mind, I'm covering XOP more so to align with any trades that I might post, any setups in the E&P stocks, energy exploration production stocks. Here it is on a weekly chart. You can see again XOP, lots of reactions and failures at this level so far. So maybe this is building up the energy to break out this consolidation, but maybe not. What I can say is we had an uptrend line. It was broken. We already had a pretty hefty correction. And again, we've had 4 failures here. Another failure would be bearish and probably bring us down to this level here, that the 40.34-ish level, and possibly more. And if we do manage to break out, like I just showed you on the weekly chart, you'll also get divergence here. So any more upside. And again, we're so close, I almost favor it. We're knocking on that level. I'd prefer to see it because that would give us, technically speaking, the divergence. We have to equal or take out this previous high. So a little pop above there. So let's say a little, I don't know, let me try to quantify it for you. Upside, I have to move that line. Let me give it another board. I can measure it about, Not much, 3 to 5% max, I think, at XOP. Then look for reversal, and your trigger would be either a bearish candlestick reversal pattern and/or a break of this uptrend line. That would do the trick. And then if we have confirmed these divergences, that would be an additional reason to hold on to that as a swing short, swing that down. All right, couple more. We need to wrap up. NKE, KNE. What am I doing here? NKE, Nike. Pointed this one out in the trading room today. What I have here are two trend lines. They're very close. I have a white trend line here that has a lot more reactions that I'm highlighting, and then this yellow trend line, which is what I call the BOD trend line, benefit of the doubt. Why that one? I have, let me move the white one and I'll show you. I have two, oh no, I've moved the wrong one. There it is. There's the trend line I prefer because I have a lot of reactions on it. But when I put the BOD trend line here, I catch this reaction here and today's reaction. And so far you can see we broke down that below that other trend line, but not impulsively. So that's why I like to say breakouts should occur ideally on high volume, above average volume. This one didn't, and now we've already turned green. So this is a level. We need to break that. Negative divergence building on Nike. Targets 75.88. With a reaction there, I think we get a bounce and then work our way down to 69.83. These are support levels. When you see a line there, and I don't say T1 or T2, that's the actual support level. I always cover my shorts above support, so I'd cover that one at, say, I don't know, 76, give or take, somewhere in there, and a little bit above on that one, around 70 or so, again, give or take. And another one here I posted in the trading room today as well is Grub. This is GrubHub. Nice clean trend line. That trend line on Nike was a year old. This one's even older. This is about a year and a half old. This comes off the late March 2017 lows. Lots of reactions on this yellow trend line. That's a target. This is the primary uptrend line. This is what I refer to as a secondary or minor trend line, and this forms a bearish rising wedge. So you have the divergence line here. You can see the negative divergence down low. You can see what I've done on this chart is I've showed you what the two previous divergent highs over the last 2 years. That's what we're looking at, 2-year chart. This was a 14% drop, 15% drop, and these were small divergences. This is bigger divergence, which would indicate a larger correction, and those were just random divergent highs without really any well-defined uptrend lines. We have a very well-defined uptrend line, so boom, a break of that trend line, in my opinion, will bring us down at least to this trend line here. I can't grab the trend line to measure, use a measuring tool, but I can tell you, go from here to here. Roughly, depends when we get there, about a 13% drop to that first target, and I'll even give you a line there as well. I can see a gap and a reaction, so make it easier than the trend line. And they also come in together about 119.23 first target, reaction there. Break of this would even trigger a longer term sell signal because that's a longer term trend line. Take us down to 95.84 and possibly down here to 65.45. That's a big drop on a stock that's $135. So there's GrubHub. Very much like that one. We just don't have a sell signal yet. And then finally, to wrap this video up, Shopify was another one of our, just like AMD, a trade that we just had our stop clipped recently. This one was a stop above 165. We had one day printed a stop above that level. Closed at 167.17, never again closed above 165, and it's so far rolling over. And again, this was a multi-year trend line. This trend line goes all the way back to early 2016. That trend line was broken recently, and we just back tested on that when that stop was hit. I figured it would roll over, but you can't always modify your trading. I didn't see enough evidence to modify the trading plan, and I still don't. And I'm still not adding this back as an official short trade yet. But if you want to take a shot here with a stop above that recent high of 177, whatever it was, or 167, whatever it was, I think that's somewhat objective. I'd like to see a little more evidence, and I also want to see the tech sector breakdown. This is a software stock, so I want to see, this is, tech stock. I need to see tech break, and then these would be the same price targets. One more thing that I like on this, and then we will conclude this video, very long video, is this bearish PPO cross. I love to see clean crossovers, meaning clean separation between the lines. That's what we have here. They work as pretty good sell signals. We had one there, we had one there, we had nice corrections. So you can see this is a breakdown and a back test, and now we have the RSI rolling off over oversold levels. We had that divergent high recently. So I view this rally that just stopped us out as a kickback rally and a back test, and I think we're going to get another leg down. And if we get confirmation here for a bearish crossover, that will help support a case. So this one a little more downside, and what you might do is maybe if you get, let's say, take out yesterday's lows, that would be maybe a reason to take a half position short with a stop not too far above the recent highs. And if this trade continues to starts to play out, maybe add to that position. I like to add on strength of a trade, as it's going forward. And don't average down. It's not a good idea unless that's your plan going in ahead of time. And means don't average down on a losing position. Average up on a winning position. We will wrap it up here. This has been Randy Finney with the right side of the chart. Hope you enjoyed it.